Good morning, friends. In the series on the income tax cases, today we will discuss a very important case on section 263 and dividend distribution tax. The title of the case is Bijni Duras Tea Company Limited versus Principal Commissioner of Income Tax, and this case has been reported in 109 ITR Tribunal at page number 105. The matter has been decided by Kolkata ITAT and the date of the judgment is 20th October 2023. First of all, I want to tell the background of dividend distribution tax. If the assessee pays the dividend distribution tax by suo motu, then it is fine. But if the department wants to create the liability of dividend distribution tax which has not been paid by the assessee, then the department has to pass the orders according to the section 115 JAA, 115O, 115P, 115Q. Until and unless the order under the dividend distribution tax is passed, the Commissioner of Income Tax cannot revise any other order to create the liability of dividend distribution tax. This thing has happened in this case. The assessment of assessee was completed under section 143 subsection 3. CIT initiated the revision proceedings on the ground that the assessee has paid dividend, on which the company has not paid the dividend distribution tax. Hence, the order passed by the assessing officer under section 143 subsection 3 is erroneous and prejudicial to the interest to the revenue. The assessee filed its objection against the revision proceedings, and it was the plea of the assessee that for doing the revision under section 263, it is the foremost condition that there should be some order, there should be some existence of some order, because there is no order on the dividend distribution tax. So the CIT appeal does not have the power to create the liability of dividend distribution tax through the channel of 143 subsection 3 order. When this matter came to the ITAT was convinced with the ground of the assessee that the CIT do not have the power to create the liability under section 263 through the bus of section 143 subsection 3, because the assessing officer do not have the power under section 143 subsection 3 to create the liability of dividend distribution tax under the provisions of section 115 JAA, 115O, 115P, 115Q. So the ITAT quashed the revision proceedings in this respect. When the revision proceedings were going on, the assessee came out with the point that during the assessment proceedings there was a mistake on the part of the assessee, that the assessee has claimed long-term capital loss two times, first from the long-term capital gain and second from the short-term capital gain. But if the assessee recalculates its tax liability, then it does not have any tax impact on the liability of the assessee. So even on this point also, the order passed under section 143 subsection 3 cannot be said to be erroneous and prejudicial to the interest to the revenue. Although that order was erroneous, but that order was not prejudicial to the interest to the revenue, because the liability under the MAT or the normal provisions was not affecting. The only effect was that the assessee was entitled to less credit in the near future of the MAT credit. So on this ground also, it was the viewpoint of the Honorable ITAT that in respect of double claim by the assessee of the long-term capital loss, both from the long-term capital gain and the short-term capital gain, the order cannot be said to be prejudicial to the interest to the revenue, because there was no impact on the tax liability of the assessee because of the mistake of the assessee. So in this case, on both the grounds, Honorable ITAT quashed the revision proceedings. At the end of this video, once again I am repeating the name of the case. The name of the case is Bijni Duras Tea Company Limited versus Principal Commissioner of Income Tax, and this case has been reported in 109 ITR Tribunal at page number 105. The matter has been decided by Kolkata ITAT and the date of the judgment is 20th October 2023. Thank you, friends.